Nobody saw this coming. One of Wall Street's most secretive trading giants, a firm most people have never even heard of, is now at the center of a legal storm tied to one of crypto's biggest collapses ever. And within hours of the news breaking, crypto markets exploded. Bitcoin surged, social media went wild, and investors started asking one question: is this just a lawsuit? Or is this the beginning of something much bigger? Let's break it down. The company in the spotlight is Jane Street Capital. If you don't know the name, that's kind of the point. Jane Street isn't a flashy hedge fund. They don't do TV interviews. They don't promote a brand. They're a high-frequency trading powerhouse, known inside finance circles for moving massive amounts of money through complex, lightning-fast trading strategies, quiet, powerful, extremely influential. And now, they're being pulled into controversy to the 2020 Terra crypto collapse, a meltdown that wiped out tens of billions of dollars almost overnight. The lawsuit alleges that trading activity connected to the Terra ecosystem may have involved strategic positioning that benefited certain players, while retail investors suffered catastrophic losses. Now, to be clear, these are allegations, but the mere suggestion that a Wall Street giant could have had an informational or structural advantage during that collapse is enough to shake confidence. Because Terra's fall wasn't small, it triggered a chain reaction. Crypto funds collapsed, retail investors were wiped out, billions vanished. Trust in the entire ecosystem cracked, and now, regulators are watching closely, including the US Securities and Exchange Commission, which has already increased scrutiny across the digital asset industry. This case could shape how institutional trading in crypto is viewed going forward. Here's where things get wild. Instead of crashing, crypto markets pumped. Bitcoin jumped sharply within hours of the news circulating. Why? Some analysts believe traders see this as a step toward regulatory clarity, a sign that legal battles are moving forward, or even a short squeeze situation triggered by market volatility. Others think it is pure speculation. But one thing is certain: volatility is back, and volatility brings attention. This story is exploding online for 3 reasons. 1. Mr. Jane Street operates in the shadows. People are fascinated by powerful institutions they rarely hear about. 2. Crypto trauma. Terra collapse left emotional and financial scars. Any revival of that story triggers massive engagement. 3. Power versus retail narrative. Social media loves a big institution versus everyday investor storyline. And whether that narrative proves true or not, it drives clicks. This case could unfold in several ways. It may settle quietly, it could trigger broader investigations, or it could redefine how large trading firms interact with digital assets. If regulators decide stricter oversight is needed, we may see more transparency rules, tighter institutional reporting requirements, greater compliance standards for crypto trading desks, and that could permanently change the landscape. This moment highlights something important. Crypto is no longer the Wild West. Major institutions are involved. Billions are at stake. Governments are paying attention. The days of total anonymity and zero oversight are fading, and when powerful financial players enter emerging markets, legal and regulatory battles are inevitable. So here's the real question. Is this just another lawsuit in a volatile industry? Or is this the beginning of a deeper reckoning between Wall Street and crypto? Let me know what you think in the comments. Do you believe big institutions have too much influence over digital markets? And if you want more fast, no fluff breakdowns of stories that actually matter, subscribe to Selbscope and turn notifications on. Because when the next bombshell drops, you'll hear it here first.